All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Thanks for joining me this morning and every morning, 9 a.m. Eastern Standard Time. If you haven't already, make sure to click subscribe to our channel. Really would appreciate it as always. If you love what you see every day in terms of our content, our Discord, make sure to subscribe to our YouTube channel. It is free for everybody. We're trying to get to 10,000 subs. We're right around 8602. So I would appreciate it if you did join. Let's go ahead and get started. All right, so here we are. I went ahead and changed a couple things. I added the ticker on the bottom for our morning note. And of course, you can comment any of your questions as always live on YouTube. But again, all the major stuff, headlines, pre market movers will be scrolling at the bottom. For example, Tesla down 1.5%. We did have a headline come out yesterday in regards to Elon speaking about Tesla and his compensation. Apple down 1.77%, AMD up 2.29%, Microsoft up 1.12%, Nvidia up 0.65%. Goldman Sachs beats on their earnings, up 0.40%. Boeing down 2.43%. If you missed any of that, make sure to click on the icon below. Good morning. Good morning, Alex. Thanks for joining us this morning. Okay, let's go around the horn. Dow futures down 157 points this morning. That is off the lows. NASDAQ down 0.44%. The S&P 500, similar to the NASDAQ, down 0.43%. It is holding the 20-day moving average. You can see right here at 47.93. Really, until we can actually clear that and actually settle above for the most part, I think the best bet right now is to wait. Not much to do here in terms of futures. If we're back above 48.10, I would definitely like to go long again. But again, I want to see if this 20-day moving average, which is your purple line here, I want to see if that is defended today. The Russell is down 0.95% at 1945. In regards to NASDAQ futures as well, I want to circle back. Very similar to the S&P, holding that 20-day moving average. We do have previous resistance at 16,767. That was the previous all-time high. We'll use that as our support or any kind of pivot bounce there. We got as low as 16.5 earlier this month. So again, we'll kind of use that as our target if we are looking for any kind of pullbacks. But you got to break that 20-day moving average. If anything, just kind of settle below that. Let's see if we get a close there. But until then, not much to do. Remember, it is a short week. Yesterday was Dr. Martin Luther King Observance Day. We went ahead and sent out 2 videos. One was the weekly recap and preview of this upcoming week. Make sure to check that out on YouTube as well. And we also did the 2023 year in review of our premium option signals. That was a great video. I'm glad I did it. Going back 12 months of work in about 30 minutes. Always fun. So with that being said, let's keep going. 10-year treasury yields are up 4.022% this morning. 4.022%, up slightly 1.82%. So again, seeing yields starting to bounce. Again, kind of the expectation is that we're going to get that rate cut in March. So I personally don't expect that to happen, but it seems that the market is very, very, very optimistic. B of A poll shows U.S. stock optimism at highest levels since 2021. So that's scrolling at the bottom. Crude oil is flat, 72.65. Gasoline futures down 1.98%. Let's see here. Gold futures 2043. Silver futures 23.20. So silver and gold are down. The dollar is up 103.25, up 0.82%. Let's take a look quickly at the dollar chart. And I want to zoom in very, very specifically to this level here. You could see this is your death cross. This is the daily chart, 50-day moving average yellow line below the 200-day moving average. So we're rejecting the 50 until we clear above the 200-day. I think for right now, this would be kind of used as our pivot point, holding that 20-day moving average on the S&P. So again, this is not an accident. I want to go ahead and reiterate this point. In regards to the dollar and the stock market, again, a lot of people saying, well, who cares about the dollar and the stock market? What's the correlation there? Remember, guys, stocks are priced in dollars. If the dollar is worth less, you can get more stocks for that. So higher priced, right? Because it's priced in dollars. When the dollar is higher, that's when stocks pull back a bit. So Kind of notice that the 20-day moving average on S&P is being defended, yet the 50-day moving average on the dollar is being rejected. Again, what I'm expecting is that if those levels hold, I see us, we get a bounce today. And again, I'm not saying we're going to go ahead and soar, but again, more than likely just some chop. Q1, I don't expect much for the simple fact that earnings are coming. We just had Goldman Sachs and Morgan Stanley today. Both of them beat. Morgan Stanley missed on the top line on the EPS. But at the end of the day, we need to see if these companies are actually worth what we're pricing in the market. Are we pricing in basically perfection, rate cuts, QE, or are we pricing in actual, organic sales growth in these companies? So you need to keep an eye on the names that have moved so quickly, with so much volatility. The Nvidias, the AMDs of the world. Remember, Apple pulled back, Tesla's pulling back now, Microsoft broke new all-time highs. That earnings report better be stellar if we want to keep those stock prices where it is. That's all I'm saying. Very, very important. Keeping it moving here. Let's see. Euro dollar on the Forex side, 108.67. That is about 74 pips down. Dollar yen, 146.60. That's up 83 pips. Dollar Canadian dollar up 37. Pound dollar is down 83 at 126.44. And of course, the dollar's higher. Bitcoin's down 43,000. We broke that. We're at 42,860. That's down 1.90%. 25.35 on Ethereum. That's down 1.46%. Want to get back to 1 point, guys. Bitcoin. I know everyone wants to talk about it. So let's go ahead and give it a couple of minutes of love here. Possible double top here on the weekly chart. That's no doubt there. So we need to crack 50 grand. 50,000 is a very key level. We've mentioned that even back since last year. So we need to see the dollar continue to fall. We do have a death cross in the dollar. We do have a golden cross on the weekly chart for Bitcoin. Bitcoin is going to go higher as long as the dollar goes down. Depending if we can breach below 100 on the dollar, that'll get us to 50,000, if not higher. I fully expect Bitcoin to break recent all-time highs of 69,355. I don't expect that this year. I'm going to be completely honest. I expect that in 2025. My big number is 100,000 because of the fact that 69,355, once we get to that level, we're going to get a sharp pullback because all of the people that actually had Bitcoin through the top, now they're going to be break even. They're more than likely just going to say, I don't want to do this anymore. Same thing with the stock market. The S&P still kind of hovering around that all-time high level, but not able to break it. Once it does, again, we'll get a pullback as well. Nothing crazy, but a correction is going to take place in 2024. It's only natural. It happens every 18 months or so. So again, we are due for a stock correction just for the fact, and I think this is the reason why it'll be earnings. It's just the valuations that we're doing on these stocks, Nvidia and Amazon and Apple and what have you, all the stocks that went up, the Magnificent Seven, the Netflixes of the world. And I really want to reiterate this point. They moved higher before their earnings. They front ran. So again, now we need to see if the earnings actually verify this kind of multiple growth. They didn't have extra sales growth. It's all stock multiple growth. So just because the value went up, that's fine, but nothing has really changed with these companies until we get the earnings. All we did, guys, is actually give our kids their gift before they got their report card. Now we get the report card. We better make sure that that Disney trip was worth it, right? We better see straight A's, especially with these stock moves. But if we don't, just prepare for the consequences, which would be a pullback in the markets. All right, we got some comments here. Good morning. Good morning. Tesla puts. Let's talk about it. All right. I'm glad everyone can hear me. Oh, man, that's so great. So far, so good. Remember, headlines are ticking at the bottom. Looking at Tesla here, we are 215.09. Like I said, I still think 180 is your target. We said that on YouTube. But again, right here down below this trend line, until we get above the 200-day, guys, this is a short. The problem is that it's going to get oversold. That's the only issue. And that's just what happens in the market. We broke that gap fill like we expected. Remember, we played puts, but we need to break 212. And 212, again, was a key level of support that we had before. Let's see if I can fill it up here. Here we go. This was the February resistance highs. We fell, and then we broke out of it again. And that was the support back in October of 2023 as well. So let's see if that 212.45 holds up. That's what I'm looking for. If that breaks, I will take a look at 193s or the 200s for puts. The only issue again is it oversold or not. Right now, I'll have to check at the open. Obviously, we have pre-market pricing 215.06 currently, so we just have to wait and see what we get in the morning. Speaking of options that I do have open, we do have open Amazon. So I'm sure everyone wants to know about that, which is totally cool. We have the 160 calls. We're on a short week. Tough, 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 right? But we are setting up for an inverse head and shoulders. Do you guys see it? You got your left shoulder, you got your head, and you got your shoulder. The problem is that we got to hold the neckline. We got to hold that 152 area. We cannot break below 151.20. Cannot. If not, then this more likely this trade is going to be invalidated. But again, an inverse head and shoulders on the 1 hour. 1, 2, 3. The question is, do we just kind of hold above here, right above 154, 153 or so? That's really the question. We're still above the 20-day. That's performing better than the NASDAQ in general. So the question remains the gap fill. Are we going to run out of time? Is that coming up? Again, is that going to happen before earnings? That's something that we need to go ahead and keep an eye on. Goldman Sachs earnings did come out. That was a beat, 11.32 billion, estimated of 10.84 billion. EPS beat $5.48 versus $3.32. That is scrolling at the bottom. So let's go and take a look at Goldman Sachs. Still need to break 390, guys. That's your top right there. That's your double top. If we can break that, then we can start looking at calls to around the 411, 410 area, possibly the 400s, obviously, depending on volume. But I do like Goldman Sachs. I've been saying it forever. Goldman Sachs and JPM are my top two banks. And if we break 390, then we're look like we're cooking with oil. So looking good all around. And let's see if we can get that continuation. We did get earnings. The question is, does the market do celebrate it? At least, with that earnings, it kind of justifies the move. Now we got to look at the future. GS will fade, banks beat, and go red. That Goldman Sachs is up actually it is down pre-market. Let's take a look at Morgan Stanley. Morgan Stanley is down, and again rejecting that resistance of 95.52, excuse me. So JPM's earnings were great, Ryan, at least that. But in terms of the other banks, yeah, it's just on a wait and see approach. Not the best daily candle, as we can see. If anything, guys, on JPM, which is one of my top 10 stocks of 2020. It wasn't 2024, excuse me. One of our top investment banks or banks that we like. But actually, no, that is a top 10 stock of 2024, excuse me. 159.52, right around the 160 area. That's what I'm looking for. Since we're at 165.85, if we can fill this gap here, 165.19. If that does break, I would definitely look to short JPM for puts all the way down here to the 158.71 level, which lines up with the July highs, which we broke out of. So again, just a little bit of a retest and a bounce. I'm totally cool with that. Let's go and take a look at Amazon one more time. We just went over it. Amazon, again, we need to break 158.14. Getting a little bit of a pullback here, but I did talk about that possible inverse head and shoulder setup. We just got to hold really above 152.50, 153 or so. So once we hold above that, again, you see the other NASDAQ brethren is up as well. The Microsofts of the world, the NVIDIAs of the world, and AMDs of the world. Those names are up, and Amazon has been outperforming the NASDAQ the last couple of sessions, not including Friday. But looks like just chop here. We're just going to have to be on a wait-and-see approach and go from there. Let's go and take a look at SPY. And SPY is setting up for an inverse head and shoulders very similarly to Amazon. You got to hold above 473.16. That's your 20-day. Very similar stuff that we talked about with the S&P. We're right there, very, very close to 480.41, 478.60 on SPY. Once we get to 480 on SPY, again, just like I said, if we hit all-time highs, more than likely we'll probably reverse. And again, a lot of the people that bought stocks at the end of 2021 into 2022 are now going to be made whole. So those individuals are just going to say, hey, you know what? I got to break even. I made some dividends. I'm out. I don't want to deal with this volatility. And that's usually when they miss out on all the gains. But again, that's just human nature. So expect that on a Bitcoin, expect that on a SPY. NASDAQ, we did not get that. NASDAQ is pretty much, the tail that wags the dog in a sense, meaning that it's running the show. So that is where we are this morning. Let's take a look at Apple. I talked about that yesterday as well. It looks like we're breaking down below the target of 182.34. Remember, that was our alert that we placed. Now, what are we looking for? 182.34 breaks. That's your 100-day moving average. We're slicing below it. Now, 180.79 is the 200-day. We could target the 180s, obviously, for puts. Or if we can get a bounce and just see if we can hold that support of that 100-day. If we get above 187.67, I want to go ahead and target this gap fill. But listen, the gap fill doesn't have to happen today or tomorrow or this week. It is a short week, so take your time. If we do continue down, maybe below 182 even, we can go ahead and target 180s for puts on Apple at the 200-day moving average. So it's just a wait and see approach here. We're probably going to break that first thing this morning as we are below. We're now at 182. Oh boy. Let's see if we get a crack at it. If we can and it's too quick, then fine. If anything, we're going to play the 200-day as our pivot to bounce. So we can either let it go because 182 is already hit. We're probably not going to get a shot at this thing. But once we get to 180.72, that's where we're going to go ahead and wait. If we can bounce above that, I would definitely like calls for and use the 200-day as support. Or this is Tesla where we just slice below that support. The only issue is that we don't have any gaps to fill at the bottom here. So that's really the only difference between Tesla and Apple in terms of how we set up that trade when we got Tesla puts, which was the only puts that we've done since in the month of January. Is space dead? Well, it's not at zero. I'll say that. You're at the 20 weekly. Again, this is a penny stock, guys. This is volatile. I would not touch it. Just leave it alone. If you start breaking above 635, maybe we can have a conversation. I've had that alert there. And we've traded it back in 2021, no problem. But right now, if it's dead, it's in a coma. And maybe it's not meant to be resuscitated. If you really want to gamble on the roulette wheel, fine, be my guest. But I wouldn't do personally. I think there's so many better options out there to trade options with or stocks with than Virgin Galactic space. And there we go. I guess Alex liked the answer. All right, guys. So back to it. It is a short week. We know the drill. We have the 20-day moving averages on NASDAQ and S&P. We're just going to wait on that. That's really it. So take your time. It's a short week. In 2023, we didn't do so great in short weeks. We did we did well the last week of the year when that was a short week. But with that being said, team, again, short weeks can be tough for everybody. And the idea is to just take your time. Take your time in everything that you do. Maybe buy some time for next week if you're doing some options trading. It is OPEX on Friday. So again, maybe we see some elevated volume. We talked about that in the last video of the weekly recap. So again, step by step, day by day, guys. That's all we need to do. We'll keep an eye on S&P. We'll keep an eye on the NASDAQ. Keep an eye on the dollar. The VIX is up 5% nearly this morning. We're at 1391. We're far away from 20 where we start really getting concerned. Again, be prepared for a correction. I really want to emphasize that point. So put your seatbelts on. That doesn't mean sell stocks today. No, it's just saying be prepared for the bumpy ride in Q1 post earnings. Unless the earnings are absolutely gangbuster stellar and we're going to soar, fair. That's fine. I do think we continue higher. Yes, but a correction is coming. So be prepared. Be prepared. What does that mean? Just watch the charts. Again, be fluid, be flexible on that. There's nothing to sell on your retirement account. That's fine. It's a 10% correction. If anything, guys, you're building dry powder to buy. Tesla's getting very close to that 180 level. That's where I want to buy some shares. Apple, pull back a little more. Maybe we can go ahead and break. Well, what's another good level on Apple? I haven't even looked. I don't know if I want to buy the 200-day. But that 200 level has been a tough nut to crack. So what are we looking for? Well, I would say right around the 170 area. That's the bottom end of this weekly range. If we can get there on Apple, that would be a good price to buy. All right, guys. And that's really it for the day. Appreciate y'all as always. I think we have one more question here. Let's see it. Mara. All right, Mara. Hope everyone likes this new format of the YouTube. I love the tickers at the bottom. All the news and headlines. I love it. All right, Mara, let's take a look at it. We're going to zoom out to the daily. We're right near support around 1832. If we can hold above that, Then we can see if we can do the 20s. But just hold 1832. If anything, the 19s. But this is your key level. That is your key level of support. That was the previous resistance. It looks like just a check back and a retest and a bounce. Again, that's what I'm expecting, dollar withstanding. Oh, awesome, guys. Hey, oh man, that is so awesome. Thank you, guys. I do all this for y'all. So again, I appreciate it. Oh man, I'm just glad that you guys are happy. I'm going to be on the radio with Nick here in a bit on our Discord. If you are interested in joining, you already know www.gar.capital. Live trading radio is only for premium and masterclass. Keep it locked on the live market blog. Guys, appreciate the love as always. You guys are the best. Thank you, the YouTube community. Thank you, Gar Capital fans across the world. You guys are the best. You're the reason I get up every morning to do this. So we will see you for the next video. And I'll see if I can do a recap of the day while streaming this on Instagram. So keep it locked. Turn on notifications for any of our posts on Instagram as well. Subscribe to our channel. We love y'all. Thank you so much again. And we will catch you guys for the next one. Cheers.